was November 23 that it was beginning to form. The break was February 24. February 24, you were sitting at 2,000. Now here you are sitting with me, and won't take chronic overperformance, and you're at the doorstep of 4,000. Not bad, guys. February 24 triggered that setup on this channel. Go and look at the YouTube. It's still there, and I'm here to tell you again. And this is sound money in a world of lies. So silver possibly the most robust right now at the high end, but I wouldn't chase the top of a pole. Gold is doing well. All of these are in rude good shape. This was a key moment because the biggest of them all, gold, seems to have made his move. Tells you that the precious metals complex is going to be in a stage of overperformance, typically on balance of probabilities, in our opinion.
Gold has been printing higher highs since bottoming out on June 30th. Gold's breakout above $2,100 in March 2024 and subsequent breakout against the 60/40 portfolio in March 2025 signal strong momentum. Historical analysis of similar breakouts projects potential targets of $7,000 to $8,000 per ounce by 2027 and 2028. Technical analyst FrancisHunt emphasizes that silver appears very strong, but warns against buying at the top. He emphasizes gold's breakout as a key signal, suggesting the entire precious metals sector is likely entering a phase of outperformance. Technical trader FrancisHunt sees gold's breakout above $2,000 as the start of a long-term rally, while now targeting $3,750 with potential overshoot to $4,000. He calls gold sound money in a collapsing Ponzi-style financial system. While reflecting on the market, Hunt attributes the rapid rise in gold to a combination of factors, including rising interest rates, falling debt valuations, and a weakening US dollar. According to Hunt, this quick $600 move is only the start, with another continuation pattern already forming. The World Gold Council estimates that 4% of gold's 2025 returns stem directly from this shift in monetary sovereignty. Global gold ETF inflows in 2025 have already reached 310 tons, with US and Chinese demand surging. The notional value of investor-held gold now exceeds $5 trillion, reflecting its role as a hedge against stagflation and geopolitical risk. In his assessment, FrancisHunt urges his HVF community to seize opportunities amid fiat devaluation. The US dollar's overvaluation is unwinding after a 12-year run. JP Morgan forecasts a 10 to 20% decline against the euro and yen over the medium term, which would exacerbate inflation and complicate Federal Reserve policy. However, Hunt says if stablecoins must hold US treasuries, it could temporarily divert capital from gold and silver, suppressing their prices. He adds that if Trump revalues gold to $25,000, it would expose fiat debasement and crash confidence in the USD and CAD. Before we dive into FrancisHunt's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
So this is a key triggering event, friends. This is a key triggering event. We started on a 15-minute. I'm going to go back up to the daily. And by the way, this move is like when it's a bigger setup structure than this move. This was when we told you the 2000 has been broken. You will not see 2000 again. This is the beginning of a major move to the upside. Continuations, upside, continuations, upside, continuations. Are you seeing this? Yes. Tell me yes, sir. Yes, sir. 3 bags full. The 3K run, reaction, then peak, Trump, tariff, tantrum, rates up on the debt markets, valuations of the debt markets down, dollar down on increasing interest rates, gold goes from 2 nines to 3.5. Talk about a quick $600 right there. After such a surge move, another continuation setting up. Yes, sir. Yes, sir. 3 bags full, sir. Are we ready? Are we ever ready? The HVF men, the men of the ministry, speaking God's word of truth unto the masses. Let it be hold unto ye. There shall be profits from those that destroy the sound monies to be made by those who like a bit of entertainment and non-advisory YouTubing about the possibilities of what we might be doing that you could ignore recognizing on a non-advisory basis that there is some shekels to be made. So many people say we can't afford your program. We can't afford your program. Yes, we haven't changed the price since 2017, and fiat's been devaluing, and you get payment options, and we give you free alpha here, and we're here to tell you, for those that can't afford the program, that even and I would never suggest as a non-advisory agent that you should do anything involving leverage, but should you end up doing so, you may well be able to afford a program. This is an entertainment channel. First and foremost, it is an HVF method discussing channel. This is your big picture, and we are looking at the 3750. By the way, a bigger structure. For those of you that missed the beginning of the stream, last time we gave an HVF call was the low traded here was 2011. And this was the classic once, twice, three times, fourth time a lady, as Lionel Richie was known to say once. This was the last time you're seeing 2K. That was our call. And since then, you did that. Continuation. 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 We traded a lot of these continuations as well. Ran the target of 3,000, slapped down, then Trump tariff tantrum, blow off move. That was very fast and very violent, and hence why you end up now in this holding pattern that is now triggering and will, in our opinion, run that. You could trot on from that, by the way. It depends where we go on the debt-based crisis, but I would certainly take some profits at the 3,750, but I'd leave some on for overperformance potentially. You could charge, if we were really lucky, you could charge through the 4K. Remember that 2K we were talking about last year, was it November 24? I was discussing it, and I normally have a robotic brain for dates on trade breakouts. February 24. I said November. It was February 24. There you go. I stand corrected to that community member stroke YouTube follower we were discussing. It might have even been Ollie. It was November 23 that it was beginning to form. The break was February 24. February 24, you were sitting at 2,000. Now here you are sitting with me, and won't take chronic overperformance, and you're at the doorstep of 4,000. It's not bad, guys. February 24, triggered that setup on this channel. Go and look at the YouTube. It's still there, and I'm here to tell you again. And this is sound money. Sound money in a world of lies. This is the one beacon of truth in an illumination in a dark world. You know, this is truth right here. You're staring at him, and they know it. The criminals know it, the frauds know it, and they will even have to use it themselves, because they all know their little Ponzi-onomics that they've inflicted on all of you is coming to an end. That's the facts. That's where we stand right here, right now. Ponzi-onomics is coming to an end. 3,750 on the. Will the Genius Act stable coins affect gold and silver prices if they are funneled into holding treasuries? So they are going to need the amount. So I think it was a 14th as a buyer, treasury coins. It's going to stable coins. It's going to get more. 1,013 on you. That is absolutely amazing. Glad to be here entertaining you. Gold has triggered. This is a key point for those of you that say, I don't have funds to make more money and join your community. You've got a trade here, which without a massive account size will see you right, and some potentially. And if you don't have sufficient funds to trade, don't trade. Not an advisory as ever, but glad to have you. And we have 439 likes. That means 43.9% are appreciative of me coming out to tell you a key moment just occurred on gold, and that there's real upside for you in a fast-moving breakout to be made and build your wealth. So if you do appreciate that, please massage the thumb. Massage the thumb. Fool the Google algo who no likey the sniper. Maybe it's not that bad. I don't know. If Trump revalues gold on July 4th next year, what happens to the USD and CAD? Any upvaluation of precious metals is an immediate admittal that fiat has been debased relative to the precious metal. It's quite simple. It's mathematics. If they wake up and say, gold is now $25,000 in dollars, what they've actually said is, the free market hasn't adjusted fast enough for the fact and the rate that we've been debasing your currency. So we're going to help the market, the price discovery mechanism, which is trending strongly in that direction, by instantly moving it to that point so that everybody can realize that their currency has been fully debased. And what used to cost $20 and then $35 now costs $25,000. So now you know. We've been destroying your currency, and we did it by borrowing money into existence. Hence why the debt market is going down along with your currency. The two die together. They are the Siamese twins of the spawn of Satan.
The market sniper, FrancisHunt, notes silver's early breakout and strong setup, but warns of potential volatility if a demand shock event occurs later this year. Silver's recent strength first gained traction in early June, when it surged more than 9% within a single week. Following that sharp advance, prices have entered a month-long consolidation, forming a symmetrical triangle pattern. This is a classic bullish continuation pattern that often appears after a strong uptrend. According to him, central banks may scapegoat gold buyers while quietly buying more themselves. In his analysis, Hunt warns of a looming debt-based collapse, urging caution with funds held in banks. He emphasizes early breakouts in silver and platinum, signaling urgent demand for peripheral metals. Platinum convincingly outperformed other precious metals, with gold gaining 25.9% and silver rising 24.9%. This outperformance reverses a multi-year trend where platinum traded at a significant discount to gold, suggesting a potential revaluation of the metal's worth in both investment and industrial contexts. With gold now triggering, Hunt sees all metals advancing in unison, a powerful bullish sign. Historical data shows that the metal's top often occurs in the latter stages of a recession, not at its onset. Given the expected delay in the next U.S. recession projected to begin no earlier than September 2025, and as late as early 2026, gold's bull phase is likely to extend beyond 2025. Let's get back to the interview.
Break here on silver. This target was run, so silver actually was in an even earlier than platinum on its upside, and ran and came back and is now rounded out. And despite, I think, gold being just triggering, silver had already slipped out and done a setup, squeezy Japanesey over here. And yeah, I think it will also do swimmingly. Will the gold-silver ratio go down or up, though? Who's going to do more? Let's have a little look. Generally, as everyone expects, during the bullish phases, silver outperforms. The problem is if you suddenly have that demand-destroying event that I think they're probably queuing up for us sometime between August and November, with October being a super sexy month for these kinds of things. Let's have a little look on that. So we are skidding still to the downside, generally a good indicator of a bull market. Gold is doing well, silver is doing better. Generally a very good sign. However, we don't celebrate until we run these lows, and we are through the October period. There's going to be a debt-based crisis, guys. There is mathematically no way, and that's where I fear that everything that isn't nailed down gets sold, and that's when the volatility can return for pullbacks on silver, platinum, thinner markets, much easier to bully than on gold. And that's when you can sometimes see the central bankers will wade into gold. Everyone else has to sell everything else that they hold and own, and you can get that bump spike. Just a warning. It wasn't a prediction. It's just a warning. Be careful out there. But I am still a massive bull. And after, were that to happen, by the way, then it's the very best moment to pivot ostensibly into silver and platinum over gold, were that to happen. Because once we crash, then we go. So yeah, not too much to read here. Technically, it's been a pullback, but it's back into a very heavy range. So let's do a volume by price on that. Just for this entire era of the we bounced there, so let's do it since, in fact, when did we first hop onto the red line this cycle? Let's go from here. You see, we're still above the point of control where the bulk of trade has occurred. You could expect a little bit of resistance to further downside, support in this instance, obviously, on this chart. So we might get a bit of gold dominance now that its HVF has just triggered, and that could be central banks And that tells you the debt bells should be ringing in your ears. Reserve assets, not anymore, not anymore. Your bonds is garbage. We have issued paper. Don't be trusting the paper and all. Ding, 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 ring-a-ling, ding, ding. Get out of your paper, man. Go buy the gold. That's what you'll find them saying. It's kind of going to be a little bit like that, I think. And that's when gold could have another surge. And the central banks are the big buyers, and they have the big money. And of course, the hedge funds, and of course, the very high net worth. So I'm not going to say that this goes straight line down and runs the 75. I think this is going to precipitate, and they will frame you petrock buyers for undermining the financial system. The EU have already had a headline under the fraud that is known as Agent Orange, Christine Lagarde, that actually wanted to be the next WEF chair for all we know, after they got that other you-know-what out. It's a bubble, which means it's going to burst. And their system is so stable, however, that a bunch of people buying a certain assets could house some topple it. So it sounds more like it's a house of straw to me. But nonetheless, that's the framing. That's how they speak. And that is what they're all about. Do not trust the criminals and their mealy-mouthed words, inversion, perversion, in every way. That's your triggering event. That's your break. That's your gold. We did have a look at the gold-silver ratio. Did we? Yes, it was here. I hope I showed it. And I was also highlighting the point of control on a volume by price. Since you broke up above meaningfully way back in 14, above the 65 level, despite getting a lot of action in the lower end in the beginning, actually you can see by duration we have bunched up and clumped it right the way up, and point of control is in and around the 84, which we are slowing our descent towards. So just beware, a debt-based collapse. Not good for your banking system, guys. You have too much money in the banking system. Hear me now. You have too much money in the banking system. It's an opinion. It's not an advice. It's an opinion. Whoever you are, I don't even know how much you have in the banking system. But however much you have, it's too much, okay? In short, we are in reset times, and the debt-based collapse is also a fiat-based collapse, which means a cost of living mega shoot. And inside all of that, you're likely to have banking collapse and contagion, which could lead to the reset moment we've spoken of, coming very, very fast at us all. What are the questions? So let's go back. I went back for questions and I realized I wasn't showing. Tell me I showed you the platinum charts. Let's just check the comments. Did you see the platinum? Let's cover it one more time. I think I did. Platinum. So platinum absolutely spiking. By the way, this is the weekly platinum. This was a call we gave. Again, we gave first to our community. They got in early. They got a little washout like me on this dip here. Yep, it happens. We tell you how it happens, guys. That is a thinner market, and they can wash you out. They washed me out on stops that were along the tweezer bottom there, perfectly at the low, and I ended up buying back in, eating my loss, belligerence, but it is all paid for now. That's your weekly setup. And by the way, that's literally a straight line up almost, despite running your second interim. And you are now in, I think it's the 4 hour, let's go 2 hour, this structure. So again, I show it to you to recap, just in case I was being a stupid fool, which is very much possible in terms of all things YouTube. So that's the short-term target, 1500. It's 1496. But as we say, much more to come. In fact, silver and platinum broke before gold, which tells you the peripheral metals are super, super thin and desperately needed. And they've been breaking early. So platinum broke its HVF on the 16th of July, which is why we've been waiting for the king to get up and call for his horse and join platinum and silver in the battle. 16th of July. If we talk about silver, its break, again, utilizing the wonderful HVF method, broke even sooner. So credit to silver, it was the first of the bunch. I think we have it here. It's a bit of an ugly setup, this one. It had a bit of a break and a pullback. In fact, if we go back to the very first draw, that was our very first draw. It just had a wind up on there. That was our very first draw, and that target was run. We sometimes cluster that, and that would be your final target. And you are now moving up. Silver is following gold. Silver, my friends, is following gold, and quite a harsh pullback after running target, but support at the second interim. Hammer wicks, showing a base. We re-added here, up a little bit of a sell-off, and it got a bit soft there, but gold is now marching. That means they all go forward.
The two most significant secular bull markets in precious metals during the past century demonstrate the tremendous wealth creation potential of these extended trends. JP Morgan projects gold reaching $4,000 by mid-2026 if current trends persist. Meanwhile, the dollar's reset will force global investors to rebalance away from U.S. assets and toward a more balanced regional portfolio. If gold reaches $7,000 to $8,000 per ounce in the next cyclical advance with a gold-to-silver ratio of 50 to 60, silver could target $120 to $160 per ounce in this time frame. If gold and silver are indeed entering a supercycle driven by fiat devaluation and geopolitical realignment, are you positioned to benefit from what may be the final revaluation of sound money? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.